So, real life, yeah. Hello and welcome to another stream with me, Christian Rauchenwald, or better said, hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this beautiful Thursday. So for those of you that are new, I recommend that you check out episode number 1 as we cover a lot of the basics there. What we're doing in the streams is we're using Elliott Wave Theory or the Elliott Wave Principle, which you can find by using the link in the description down below. So you can either read the book online for free or you can order a physical copy. And we're using Elliott Wave Theory to try to forecast movements of stocks, indices, and so on, and basically make trading decisions based on that. Now, as always, don't forget, if you like what you're seeing here, like and subscribe and enable notifications so you don't miss out on any future live streams and or videos. And other than that, important disclaimer, here. So everything that I share in this video or live stream, depending if you watch it now or if you're watching it later, is or reflects my personal opinion and is in no way professional or financial advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, these streams here aim to be around the 30-minute mark. So for that purpose, I will actually start a timer on my phone. And as usual, we will begin with the very, very basics, so which tools to use and so on. And for that, I'm actually in a second gonna share my screen. Just need to find the right screen. There we go. Screen share, and that's the right screen. So as you can see here, that's my eToro portfolio. You can also check it out by using the pinned link in the chat or by using the link in the description down below. So to verify my track record, as you can see, I've been beating the market since I opened this portfolio quite consistently. Although this year we are off to a bad start, I'm still not worried about the end of year result. Might obviously not be like last year, but I'm still confident that I can beat the markets, and not only beat the markets, but also beat inflation and actually walk away with a decent profit. Now that said, as far as tools go, first of all, we have TradingView if you want to use Elliott Wave Theory, which is also linked in the description down below, and you can use the tools there to basically label Elliott waves, although you don't have any kind of feedback because this would be completely invalid as a pattern. However, TradingView doesn't tell you that anything is wrong here. So that really only makes sense once you have a feeling for what you're doing. Alternatively, you can use wave basis, which you can sign up and you have to add a credit card, if I'm not mistaken, or maybe not, for the free trial. Anyway, you don't have to pay for it once your trial expires. You still have access, but not to all the features, but still to the basic features. And unlike TradingView, those features also include at least some bonus features like forecasting of where the next wave is expected to end and so on. And last but not least, the probably best tool out there is Motive Wave, which looks a little bit outdated and requires an additional data source, for which I'm personally using Interactive Broker, but has the best Elliott Wave integration in my opinion, because it clearly tells you if something is wrong with your wave pattern. So it has at least most of the rules integrated. And last but not least, if we skip back, I'll have to update my Stream Deck to be able to do that a little bit faster. There's also a one-page cheat sheet next to the book that contains all the patterns and some rules and how they subdivide and so on in one A4 page. And that cheat sheet that we're using fairly often is linked in the video description down below as well. You can download it from a Google Drive link and basically print it. I would recommend that you get at least a cheat sheet, print it out, and have it next to you, because it's really useful for labeling. And other than that, in the long run, obviously go and get your copy of Elliott Wave Principles so you can actually look things up in the book. Other than that, you can always use the online version of the book. Whenever I'm referencing the book, I will mention the page number, which is for people that have the physical copy, but I will also mention the chapter, which will help you if you're using the online copy to follow along. Now, that said, circling back to the main desk cam here. Yep, so there we go. Over the last couple of episodes, so since the beginning, we've created a forecast for the Standard & Poor's 500, where we are basically currently in a waiting position. So either this here turns out valid, and we're looking at now basically wave 3 developing and a downwards movement, which seems to have started. Might be wrong. We could still go slightly higher. Again, we're not worried even if we would go slightly higher than 4,325, which is wave 4 in this leading diagonal pattern. So we're not worried, but as long as markets move up, my portfolio, since I'm betting against the index, is losing a little bit temporarily. Again, it's like a dumb, maybe not dumb, but like a weird saying, but you don't lose until you sell. So as long as I don't close my position, there's obviously still the chance for things to turn around. And yeah, so yeah. Anyway, so here we're in a waiting position in the NDX 100, which we also reviewed and worked out a couple weeks ago. We're also still in a waiting position. A turnaround would right now actually be exactly on the 50% retracement here, which would be in quotes textbook. Although there is no fixed rule that it will always turn around here, but there's like kind of, yeah, not a rule, but frequently, regularly, however you want to call it, either 38.2, 50, or 61.8 are the points where this wave would turn around. If we really keep going down from here, it would be like really a perfect show again for how useful Fibonacci retracements can be. Again, here we are also not worried, but here we don't have our wave 2 set yet because yeah, we don't have the pattern played out fully yet here enough or to work it fully out. Yeah, so we're waiting for Shopify, which we also looked at a couple episodes ago. We actually have a similar pattern. So right now we are in long positions in Shopify, or actually it's not a similar pattern because we're in long positions instead of short. And with our stop loss at 23.63, at which point this labeling would become invalid, or that point would definitely become invalid, and our take profit actually non-existing, because if we play that big game, which is a multi-year outlook, because if we zoom out a little bit, zoom out, we can see that our wave 1 here actually started in 2016 roughly. So we are talking about multiple years for wave 1, and then also around 2 years for wave 2, which may or may not be finished yet. So again, our labeling can also turn out wrong from time to time. And if that's right, then that third wave here would be at least also multiple years, which means it's like a long-term play, but again, with a great risk-reward ratio if we turn out to be right. For BKI, Black Knight Inc., we have the same situation here. So basically our assumption is that, and our stop loss is at 52, which means we have like less than 10% risk, whereas our reward ratio is more than potential reward is more than 100% on our position, because again, we assume that this is how it looks like, and we go up from here. For Ford, which we looked at 2 days ago, it's not as clear cut, and our stop loss here is like really far away. So we're at 3.96, so let's say $4 per share, where we would declare this invalid and give up. However, even with that being the case, our reward ratio is still okay, because we would still expect them to at least break the 18 mark, so to break out here for a third wave. And we're actually gonna like add something here real quick, and that is a Fibonacci retracement. And that we need to add, so there we have 0, 1, so that would be one of them. So let's check this one here. Again, there's no set in stone rule as where it will turn around, but 38.2 would work, 50 would work, 61.8 would also work. So we still have room to go down here if it plays out like 1, 2 here. And on a bigger scale, let's double check the other one. So I'll zoom out a little bit, and basically if we say this here, I'm not sure if that or that point is higher. We would have to check, but for the retracement, it doesn't make a huge difference. And here we would have like wave 1 and then 2 turn around the 50% mark. So like not 100% certain or confident here, but confident enough to have 1.3% of my portfolio that you can, as mentioned, copy on eToro, currently invested in that position. And so that's that for Ford. So we'll see if Ford delivers or not, and we'll see how that plays out. If it plays out as expected, which means we would actually stop exactly at the trend line, and then from there have our development 1, 2, 3 would probably break out here, or for the first time a little bit, 4, 5 completes that breakout or so. We'll see. But yeah, then yesterday we looked at GameStop, because that's one of the reasons why this channel actually exists. And I pointed out, so Elliott Wave Theory, if you read the book about it, I'm going to switch real quick to another cam to cover that real quick. So Elliott Wave Theory, if you read the book about it, is about math psychology applied on the market. So like the usual patterns. If we actually jump back, if we think about things like support and resistance, for example, if we go into, I don't know, Shopify, then zoom out a little, and we would, for example, recognize, okay, the price bounced, let's get a horizontal line, So, and basically just attach it here and extend it. And we can see at this price level, the price either bounced to the downside or it served as a support. So it either was a resistance on the way up, or it served as a support on the way down to turn around the price movement until here, where it suddenly didn't help anymore. But the thing here is, with support and resistance, it's purely mass psychology, because you have some, I mean, you have usually at price levels that are like nice numbers, like 100, for example, here, yeah. Psychologically, people will start taking profit and say, okay, maybe they entered here at 25, but at 100 they start selling, which automatically creates the drop here, and then makes it harder to break the 100, yeah. And then on the way down, it's the same thing. When people see it's at 175 and they're like, okay, if it would drop to 100, I would buy. And then basically enough people have that mindset that they follow those easy numbers, which then creates those bounces that we then call support and resistance. And then further along, so even if that happens at a not so even number, so like here, I don't know, we're at 100, or like, let's say here in that area, we also see that here it's like a lot of activity, like in that area, yeah, which would be around 150, surprisingly, yeah. But then people now would look, and if the price would approach that line, they would look, oh, that was a resistance in the past, I'm gonna sell here. And so it becomes kind of like a self-fulfilling prophecy based on mass psychology, yeah. So that's with a lot of things. So support and resistance, same with Fibonacci retracements, maybe not as reliable because not as many people look into them, but there it's also, okay, it often will turn around at 61.8, 50, or 38.2, and so people make their trades based on that. Okay, I'm gonna take my profit at that price or slightly below that, or okay, I'm gonna add my buy order a little bit here, and then if we look from this way, a little bit at 61.8, then I'm gonna buy a little bit more on 50, and then I'm gonna buy the most at 38.2 because I don't think it will fall further, or sell in this case if we were to bet downwards, yeah. And yeah, so those are self-fulfilling prophecies, mass psychology, and for many stocks that holds true. For GameStop, it's however a completely different situation, because since that whole thing started, where initially I covered it and even made some posts on Reddit about it, where Elliott Wave Theory proved to be relatively reliable, although back then my understanding was also less than it is today of Elliott Wave Theory. Nowadays, I don't think Elliott Wave Theory applies a lot anymore to GameStop, because 76 million shares of GameStop have been directly registered, which means they are removed from the supply, which means we're talking about a low liquidity asset here, where even lower amounts of transactions can have or cause relative a lot of volatility. And yeah, like also, I mean, not going to argue the whatever, the stock is manipulated, the stock is overshorted or so. Overall, I think the stock is undervalued, because obviously it's a now profitable company with more than $1 billion in cash on hand and so on. But yeah, not the topic of today's stream, but that's what we did the last couple of episodes. And with that, basically, we are caught up. Now for today, I honestly haven't picked yet what we're going to look at. So we're going to actually circle back and in eToro open the economic calendar and pick something that has earnings coming up, or yeah, earnings coming up sounds good. And earnings coming up basically preferably not in April yet, but in May, so there's still some runway. And yeah, then we see earnings reports are the ones in blue, and they're Peloton, yeah, they are probably on the downwards trajectory because they don't get profitable. BKI has earnings coming up, interesting for us as well. I think we're going to pick something bigger, which would be AMD, so the microchip manufacturer or CPU manufacturer and so on. I actually have to search here. So AMD will be the next thing that we look at. And AMD, NASDAQ, there we go. And we're going to start as usual on the monthly chart. And there we go. Now it takes a moment to load, or it doesn't. But as mentioned, since I'm using TradingView as my data source, we always have to double check and see the history, because if we look here, we have history till 1973, and it really makes a difference. Whereas if we look here, we have history till 2015. So we only see this part here, which makes it a little bit harder to label, to be honest, yeah. But why is that important? Because if there's nothing on the chart right now, remove one drawing, okay, so now there's nothing on the chart. If we look at this here, then my first idea would be to say, okay, we have something like, that here was probably higher, 1, 2, yeah, I mean, it's not perfect, but basically, can we, yeah, obviously 4 and 5 are completely wrong right now, and 3 wouldn't have been finished yet, but if we look from the start, we would start here and would have probably 1, 2, or 1, 2, 3, 4, 5 here. then ABC, which makes wave 1, 2, and then we would have another. Yeah, here it's going to be tricky because we have the retracements going too far. So it might actually turn out that that's 1, 2, 3, 4, 5, which brings us here to 0.1. And then we have 1, 2, 3, 4, 5 for wave A, B, C for wave C. And that one here is going to be tricky even as an ending diagonal, but it would need to check out as like 1, 2, 3, 4, or 4 could even be dragged out till here somehow 5, which brings us to wave 2, and which means we would now be in wave 3, starting in actually 2015. Yeah, so, and we have the first candle here, January 2015, and here we basically have the low in July. So we basically start from July and would then do something like that is here September. Okay, then not July. Okay, wait, changing the tool. So this here is actually July. So there we have our low point. And from here, we would then do this. And it would come up like that. Now, we can also, by the way, automatically in TradingView, say, in Motive Wave, say, decompose. And would say that's how it checks out. I mean, we would have to decompose it further to see if the rest checks out as well. Not sure if I agree with that. So, but overall, because that wave 1 seems very long, but overall that's what Motive Wave is right now coming up with, indicating that we just finished a wave 2 here. And yeah, so which then would mean that this would be wave 3. And for that, we actually, yeah, that doesn't look right because that's probably then more like, or would probably be more like this, so that this here then is wave 1, and now we're looking at wave 2, 3, 4, 5, and then that's basically wave 3 of the next degree, and then we would look at wave 4 here and wave 5 then here, which obviously, I mean, timeframes here are not representative of anything, they're completely random, but otherwise, if this would be our entire wave 3, it would be way too short. And because wave 3 is usually the strongest movement, and on top of that, we would have a problem with, we would actually not label an impulse then, but we would then have a leading diagonal, which, yeah, would then only be part of an impulse, blah, blah, blah. So basically, we can assume that that's 1 and 2, so that we are looking at 1 degree lower. And to do that, if that's 1 and 2, then first of all, yeah, let's get ourselves a Fibonacci retracement for that area. And there we go. And we would see that actually we are far away from the area we usually would correct to. Now, again, let's decompose that for one level. So it would say that's 0.4. Maybe that's where it's wrong. So if we consider in terms of movements, yeah, so maybe it's, yeah, let's get rid of that and decompose one more time. Yeah, replace them. So yeah, that's, yeah, I still don't think that it's like this. Like, so it might be, although here we obviously have a very short wave 1. Yeah, wave 2 is then probably, let's zoom in. All right, let's actually go on to weekly charts for now. Circle back there. So, and then align those things here properly. So wave 2 would, according to that, be here. And then let's check if we add a Fibonacci retracement here, so which would be here to here. Then we would have our turnaround actually like far below. I need to probably zoom in to get the other percentage to show. Yeah, like mostly on the 78.6, so which is still like, I mean, we went lower here, but still it's like within the, yeah, I said not guaranteed turnaround levels, but what we would expect. And then we would actually have the strongest movement here. Wave 4 would correct here. And then we would go up to wave 5 slowly, although we would have to subdivide this, which probably is not a huge problem because very often a wave pattern basically fits into a channel and that all fits into a channel. So, and then we're gonna label or fix this here and fix this here as well. And then, yeah, like fix this here, and there we go. Then as for the retracement, as said, we're not yet far enough down for two reasons. If that actually turns out right. So, and one reason would be, again, if we look at the, why do we have two? One is the pattern. So one reason would be the, as mentioned, Fibonacci retracement, where we would expect the 38.2, 50, or 61.8. The other reason would be that very often, again, not always, so we would actually expect, to be precise, somewhere around the 50%, I guess, would check out. So 1 second, just going to add a horizontal line as a helper for me here real quick. So yeah, pretty much the 50% retracement, because again, not always, but often we would have, or reasonably, whatever, a wave 2 would correct to the area of wave 4 of the previous impulse wave, which would be this wave 1, of the lower degree, which would be the 1, 2, 3, 4, 5 that makes up that wave 1. So we would actually expect a correction down to 1566, which would also be like a really, really deep drop still for AMD. And in order to confirm that, we would have to assume, okay, most often wave 2 would turn out to be a zigzag. And if it's a zigzag, then basically it would, for example, look like this. And there then very often, again, we don't have to go down exactly to the 50% area, but there very often we would have a trend line. Very often wave A and C are identical, so which would get us at least in the area of 38.2 retracement. Now, if that is the case, yeah, so I'm not saying we guaranteed go down till 16, because we already saw, okay, it's like it would really be a steep downturn for AMD. But if that would turn out to be an ABC zigzag, then we would at least expect to go to 34. Well, and then dropping a little bit, which still would be like a 60% drop, and then dropping a little bit further would actually really not make a huge difference, in quotes, yeah. For that to be true, we're gonna switch to the 2-day chart. And if that here is ABC, then this here needs to subdivide into an impulse or a leading diagonal, which, by the way, just real quick, so circling to the desk cam. We know because, first of all, here we have the breakout or breakdown for an impulse wave, which tells us, okay, wave 2 subdivides into any corrective pattern, but usually not a triangle. It tells us that wave 2 is a 42% chance that it's a zigzag, 40% that it's a sideways flat corrective. And then when we look at the zigzag, it tells us wave 1 of a zigzag subdivides into an impulse or a leading diagonal. Yeah. Now, if we try to, again, circling back, wrong button, popular investor, blah, 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 screen share, there we go. So if we now try to label this here, and I think we again have to first make sure that our candles are tagged properly. Yeah, so I know I'm saying it every stream, but that's really the only thing that Motive Wave, I mean, other than looking maybe more modern in some ways, but that's the only thing that's like fairly annoying to always, when you switch to lower time frames, having to pick the lower high point again. I honestly don't think that it can be that hard when you switch to a lower time frame to, you know, which candles made up the candle on the bigger time frame, and then pick the high point that was there. Yeah, so like if it was attached to the high point of that candle, then simply then attach it to the high point of whichever candle was part of that candles. Whichever of the candles was part of the candle. Anyway, getting off topic here. So we would have to fit an impulse or a leading diagonal in here. And it actually, we fit a nice leading diagonal in here. Although one also has to consider, all right, now it's an ending diagonal. Why does it say ending? It should be a leading diagonal. So let's check that real quick. The difference between a leading and ending diagonal, so if we switch again for a second, is if we look at a leading diagonal, it's made up of an impulse, a correction, an impulse, a correction, an impulse, which means it's actually made up like a regular impulse, just with different rules in terms of retracements, wavelengths, and so on. Whereas an ending diagonal is made up of like corrective patterns. So zigzag, double zigzag, or triple zigzag, then any corrective pattern, then zigzag, double zigzag, triple zigzag, any corrective pattern, and again zigzag, blah, blah, blah. Yeah. So that's really a huge difference. So if we say leading diagonal, it fits the same. The question is if we subdivide it. So, and I feel like that actually checks out. So I'm not sure here. Here the low is 99.35, and here the low is 100.8. Actually a little wrong here, so let's check that again. This here is low 100.08, and this low was 99.37. So actually this would be here, and then wave 2 could still be here, which would then, yeah, leave us with 1, 2, 3. Nope, nope, nope. Okay, we'll have to look on daily to get more candles and maybe fit that in. So if we go here, if that's 1, 2, then that would be wave 3. 4 could be long drawn out, and then wave 5 would probably be here. So that would actually move this here to like this, or more likely like that, and then would mean that we would have to fit another impulse or leading diagonal into this here, which we can. 1, 2, 3, 4, 5. So yeah, again, and then here the low is 83.99, and here the low is 83.27. So that's the lowest point, which could work out, but it could also be like this, and then the corrective pattern here would have to be a flat corrective pattern. Although that actually works better with ABC as a corrective pattern here. And then wave 3 would, however, be the shortest, which doesn't check out. Yeah, so but if wave 1 already would end here, we have a problem fitting 1, 2, 3, 4, 5 in there to confirm it. So wave 3 cannot be here, which means this couldn't be wave 4, which means here we would have another 1, 2, 3, 4, and 5 not yet developed, so which doesn't check out, because that would mean that this here, yeah, so that we haven't finished wave A yet, and that basically that here would be wave 3, which it cannot be, because if that's 1, 2, and that would already be wave 3, then wave 4 cannot retrace into this area, because that's only possible for leading and ending diagonals, and an impulse wave is always another impulse wave. It's never a leading or ending diagonal. Yeah? So because it's a strong movement, which means you don't get that retracement into that area of wave 1. Now, yeah, so that's that, which means if we zoom out again to, let's go to weekly. So which means that ABC here is invalid. Zero, 1, 2, 3, 4, 5. How could that otherwise? What if that is? Yeah, that doesn't check out as we said. So that we have this here as a 1, 2, 3, 4, 5, because then 3 is the shortest wave. If it's 1, 2, 3, 4, 5, that actually would work out. So if we say tools, Elliott Wave Impulse, so again, yeah, but then more like, yeah, but then it should be a leading diagonal, and then, which would mean we would be in the ABC leg right now. So wave B, which is any corrective pattern, which may or may not be the case here. So honestly, I mean, as you probably noticed, I'm honestly, I forgot to switch back to the screen share. Sorry for that. Yeah. Please just point it out in the chat when that happens. Then, yeah. But yeah, honestly, tricky to label this. I would obviously, as said, on like first glance, if we look like this, I would just say we're looking at this here again, whereas wave C would probably be more likely to go till here or so. So like this. So still be within the area of wave 4, but not all the way down. And yeah, but I currently cannot confirm that wave pattern, because wave 5 is clearly the strongest one, which we would have if it's like this. If it's like A, B, C, then we could have that possible. And obviously, it's a completely different scenario, because if it's like this, then we're now in a third wave again, and we obviously would buy AMD and basically assume that we got strong upwards movement. If it's, however, like we had it before, then we would expect that somewhere wave B finishes, and then we have a corrective pattern that takes us down a lot. Yeah. So And again, it also makes a difference. So if we go with the auto decomposing, which we hardly can subdivide, whoop, then it would say, hey, wave 4 is here, and we already would have retraced even further than wave 4. And then making the assumption that that is A, B, C, which also would be wave 2, which then means we're right now in wave 3 territory, which would mean that we are looking at a breakout from the so-called base channel. So that. So we would be looking for a breakout from here. Obviously makes a difference, and it's like really a big difference. And on first glance, I'm saying on first glance, I'm not saying guaranteed or whatever, but on first glance, both options here seem possible. So A, B, C, or A, B, C, and now we're going up again, yeah. And yeah, that happens with Elliott Wave Theory because despite sounding so simple, so like sounding like, oh yeah, you just have 1, 2, 3, 4, 5, and then eventually you have like your A, B, C corrective pattern or some other W, X, Y corrective pattern and blah, blah, blah. There are a lot of rules and guidelines to each of those patterns that make it possible that depending on what you're looking at right now, multiple options could be true. Now it would come down to work out the options that are true and then look at which of the options fulfills also the most guidelines. And then based on what's fulfilling the most guidelines, we would actually then use that for a trading decision. However, again, since Elliott Wave Theory relies on mass psychology, it applies better to indices like Standard & Poor's, NASDAQ, and so on. And in individual stocks, we will here and there run into a situation where we cannot find a valid pattern or a pattern that we really, really like, in quotes. And so we also will see situations where we just have it like this. So as much as I would have liked to know if I can short or should short AMD, or if I want to buy it or at least look into buying, so based on Elliott Wave Theory, for AMD, I actually am right now unable to make a proper conclusion, to be honest. I will just not do anything, so I will neither buy nor sell it short for the foreseeable future, and we'll eventually revisit the stock, and then either we get a better pattern or not. Now, before we, however, do that, again, let's take a look. As said, we have like a longer history here. Let's check wave basis. AMD, Advanced Microservices, yep, seems about right. They have a history that's also from very, very long ago. Now let's try to enable logarithmic price scale. So we would actually start from down here. And yeah, the automatic labeling doesn't work. So, but if we were to say that this is 1, 2, 3, 4, and then we actually would be right now. No, it labeled wrong. So yeah, 5. So it just put the points wrong. So that would be our starting point. That would be 1, which then would, again, that's the nice feature about wave basis, that it actually provides you with predictions. So if that's wave 1, then wave 2 should turn around in this area. Now we can see that it probably, what's the low here? The low here is 90.62, and the turnaround point here is, yeah, like, but the low here is really 90.62. No, we're missing something here. The low here is 9.04, and the turnaround area here begins at 891. So it didn't fully enter that area, but still. And just for those that are doubting, so this area here is not drawn because of those candles, but it's drawn because of where I position the number 1. So yeah, and that just happens to apply very, very well. Not super well in this case. Now for wave 3, it would actually predict this area that we hit very nicely. So enable that, and we actually, as said, hit it very nicely. And again, I wanted to actually lock in all tools here. For wave 4, it would then actually, again, be not as nice. So it would predict a shorter downwards movement. And since we're here now, for wave 5, we would probably get a relatively high value. So that's at least how it would check out in motive waves, so even different. And here we would also be starting from 2015. And here, as said, we could actually start further back because the history in wave basis starts in 96. Okay, so wave 5, as said, goes here, and yeah, goes here. Yeah, so in 96, and here we actually have, so in wave basis we're also missing history, and we are only able to label a pattern based on this. Yeah, like if we consider the long-term pattern, then it could be like this, which would mean we are in a third wave right now. And even if this wave 1 hasn't completed yet, so like wave basis makes us believe here that we're still now in the 5th wave, we would still have strong upward movement. And actually a lot of upside here. So, I mean, our downside is also ridiculous because it would be at 1.51, or if we go with this, then it would be, yeah, it's still 50% downside, but still like a couple 100% upside here. Yeah, honestly, I'm gonna stay out of this because again, I'm unable to get a really clear read as to what applies, what doesn't apply. So I'm gonna just leave AMD be. But if I would have to, I would actually buy it right now. So I would actually take the gamble with the stop loss as said being at the $50 mark roughly, and a take profit happening once we actually have after we have a new all-time high. So basically a couple 100% upside. But because I'm having conflicting patterns on the chart, and I'm not able to, doesn't mean that there is no pattern that really fits well. It just means that my skill set of Elliott Wave Theory is not sufficient yet to really come to the right conclusion here. And in that case, I'll just rather stay out of the market or out of this stock for now. And yeah, that's it. So yeah, with that also, we end today's stream. Sorry that there was no clear yes or no. There will be streams next week. The market, I think, is closed on Monday. I will anyway schedule the streams as usual. So if you subscribe and enable notification, you should get notified when I go live. But you can also check the channel. Maybe by Monday morning, I should have the schedule for next week live. And we will then continue with picking other stocks to look at, and basically based on that, find a few more positions to either buy or short in my portfolio. And yeah, so that's pretty much it for today. Thank you for tuning in. Wish you all a pleasant Easter if you're celebrating it, and a happy weekend already ahead. See you then next week. Till then, bye-bye.